Hey everyone, welcome to the Trading Floor's 25 Days of Tradesmas. If you're already a TTF member, check the announcement channel in the Discord for today's giveaway. If you're not a member, make sure you stick around to the end of this video to find out how you can win $1,000.
Hi everyone, this is Roxie from the Trading Floor. Welcome back. This is the third video in the little mini-series that I'm doing on DeLorean and building your story, creating a more confluenced way of trading. As I've shared previously, the beginner-friendly different confluences that you can use would be EMAs, and using those to help you to see pullbacks and price as it's moving in a direction. So here you have all the EMAs stacked. Price is moving very bearish. Your EMAs is showing you bearish. And when price moves into the EMAs, you get a little nice bounce out of it. Again, into the EMAs and a nice bounce out of it. Okay, so that type of thing can help you to understand how price is moving. Again, as I shared before, I have a few different indicators on my chart. So I've got simple sessions just to denote out the first 2 hours of the session. That's typically where I focus on my trading and where I'm focusing in these examples. The SMC toolkit is just here to share the fractals, which, as I said before, is a really great way to very mechanically track your structure, your market structure, and to understand when the market is changing direction and when you are still in a bullish direction and when it's changed to bearish direction, for example. I have the DeLorean on here that I have on here for the EMAs and the signals. It is all default settings. If you haven't seen the first video, that's where I break down exactly what the settings are and how I have that set up. I'm not going to take time for that here, so please reference the first video. I also have the ultimate oscillator down here. That's for divergences. Divergences, again, I have listed here on intermediate to advanced. Really great confluence for your trading. Can really help you to be able to understand when price is pulled back and when you've got it potentially springing into a nice continuation trade. That's what I use it for. It can also denote reversals, as it did here. You can see that price is just bouncing around, okay? It essentially starts to move sideways into consolidation. You can think of this as a spring. Price is going to potentially burst out of it. You can see here we get a nice breakout trade opportunity when it breaks right out of this pattern, and it has done a reversal, okay? That reversal comes in here, you can see, and the divergences as price is trying to spring upward, okay? This ultimate oscillator is moving downward, so opposite direction shows you that divergence. Now, if you're somebody who can take breakout trades, fantastic. This provided a great breakout trade opportunity for you here. What DeLorean shows you is when price closes below the EMAs, then you have an opportunity to take an entry as price is falling very quickly. One reason why I would not find that as attractive to me as a potential entry point, it's fine, but your stop loss, where do you put it? Do you put it all the way back above here? That's an awfully large stop loss. Okay, so it becomes a question of where exactly do you put your stop loss? And again, as I said before, I prefer to take trades when they've passed through the EMAs and it's dropping like this. I prefer to take them on the pullback, okay? Now, it's pulled right back down in here. Market opened right over here, so this is right around market open price. You've got a strong support right here, and you have the potential that price is going to bounce from here and continue upward if it's just a pullback instead of a full-on reversal. So those are things that you can watch out for and might make you a little cautious on that trade. Now you might be wondering, okay, great, so I've had a signal, how do I get into that trade? I've got a few different ways that you can get into that here. One of the patterns that I like to trade is a chart pattern. It's called a drop, break, drop. That's the bearish direction. You get an impulsive move down, it breaks, and it can break in the form of a few candles, but then you get a continuation entry like this where it's got a strong engulfing candlestick. I frequently like to trade these when there's just one, maybe two candlesticks in between. What that is showing you is that you've had strong momentum, very brief pause, and then strong momentum potentially coming in to continue the downward move. Again, drop, break, drop, drop, pause, break in the middle, drop again, okay? That also produced a small flag pattern. So that's a way to confluence the trade. Though the entry came here, you can give it a brief pause, see what it does. So you get a breakthrough, retest of this zone, and then, continues. So that's kind of the type of confluence trading that I'm talking about and why I marked this out as the entry here. Now you could, again, have taken it right where DeLorean signaled for you to take it. This is just for example, where if I were trading it, I would recommend taking it because I've created that confluence and I know I have a higher quality trade. I also have a smaller stop loss. I know where to place my stop loss in that instance, as opposed to over here, where do you place your stop loss? You've just had a large momentum move. Okay, you've had a change in direction. So as I shared before, this becomes right here, that's your range. That's your last bullish leg and price. All the rest of this is the internal. That's why I have this marked as an internal break in structure. Until it breaks down here, you do not have an actual break in structure in the larger sense of the last big bullish movement and price, okay? So once it does break through here, that's where you have a potential that you have that stronger change in direction, and the market is now going to continue in a bearish direction. You also get your EMAs are all stacking in the correct direction at this point in time, and now you can start to look for bearish moves with continuation pullback trades. So here, if you trade candlestick patterns, you get a nice engulfing candlestick. As price has pulled back into the EMAs, you get a nice bounce and it continues downwards. Now here, you can see that the market was slowing down. So although we had this drop and it drops again, so this is being a second leg in price, okay, it has started to chop. It's not as impulsive. And you can see that also denoted here in the reversal type divergence that causes this pullback right here, okay? And then it pulls back down into here. You get a double bottom pattern. You actually get a second double bottom right in here. And then you can see right here that you get another divergence. In this case, it'd be more like a continuation or hidden divergence, and that's what allows price to push up again. Now, this might seem like market structure has changed over, and it did. It did very briefly. So market structure did break because this is your last low. It broke right here. It pulls back. You get this double bottom. If you're trading just pure price action, you have an engulfing candlestick pattern, that might be a solid trade for you. But in the case of trading the DeLorean and you're using like the EMAs, that's what helps you in this case to understand that this is a 1 minute change in direction. This is a 1 minute trade where the price has moved bullish, but overall price is still very bearish. And that's what these EMAs are helping you to see and denoting where the pullbacks are, okay? That's what that really helps you to see visually, because you don't want to get caught up in small changes in market structure and direction on the 1 minute when your overall is still what's driving it. Your 5 minute, 15 minute, 1 hour, 4 hour, okay, those time frames are what is pushing it more so. This is simply a small pullback on those higher time frames. If you haven't studied market structure, really highly recommend that you study that. Also look into multi-time frame analysis. But keeping things simple, again, back to beginner friendly, the EMAs are a really great visual, help you to understand what's happening, that these are just pullbacks and that you don't necessarily have a trade yet. So it pulls back and then you do get a trade. The DeLorean gives you a signal. It helps you to stay out of all of this noise, all of this kind of sideways, small reversal in direction movement. And you get more of this is a micro scale head and shoulders pattern, left shoulder, head, right shoulder, okay? And right here, where I have this break in structure denoted here, that's where the pattern carries out. You break the neckline, okay? The DeLorean has given you a signal, and then boom, you're in. You put your stop loss right up here. You're the swing, 1.5 R. And again, now 2 winning trades. You have a potential you're up 3 R for the day within that first 2 hours. Nice clean signals, clean movement and price. And that's how you trade using additional confluences. So I've shown you chart patterns here, divergences using the EMAs. You have the candlestick coloring so that you understand kind of, okay, hey, this is still moving bearish, but all of a sudden it changes green. Okay, now we've had something that's a little bit deeper pullback and we've turned purple. This is where you want to be cautious. This isn't your trade. The candle coloring can really help to cut out a little bit of the noise. It can act as a little bit of a filter for you to help you see where price is moving stronger in any one particular direction. And as I had shared before, why does this reversal happen here? Okay, and why may you be interested in taking a reversal trade as opposed to, say, a continuation trade? Now I want to touch on that real quick. As I shared before, I mark out the opening daily candle price location and the previous day's high and low. Now, what happened right here is you can see this is the previous day high. Price pushed up. It took out the previous day high. That was a large portion of liquidity. It bounced around right here, consolidated, and then it springboarded back down, reversing direction after it had taken out that large source of liquidity. That's why I mark those out so that I understand. And, previous day high, sometimes the previous day high is not relevant and I need to look for, say, 2 days back. Okay, so you're going to use your judgment on where the next set of liquidity is on the daily based on those highs and lows. Okay, that's how I'm marking that out. And the reason why I find it to be particularly important in my trading, and I use it very strongly as a confluence for my trading. Now, as I said before, I mark out the daily candle open as well. Why do I do that? Because as you can see, price is falling. Okay, it's just been falling. And it gets down here to the daily candle open. And this is where we see a reversal going back in the bullish direction. Now, it's outside of where I would trade, but as you can see here, this is where you might start to pay attention to the reversal occurring because it's happening with an additional confluence. Is you'll understand that it's around that daily candle open. There may be a lot more interest there for people stepping in where they can buy that particular day's price movement. Okay, so that's where you can see that price has been falling. We can drop a trend line on here. You can see price breaks out. We move sideways and then it really starts to move. Our EMAs cross. We're getting this upward movement right here, all in a very bullish direction. Now, again, understanding multi-time frame analysis, that may still be a pullback on a higher time frame, and it may continue in a downward direction as it did right here. Okay, so being very cautious about that, but that's why you may be more interested in a reversal from, say, the daily candle open, or from if it had come down and taken out the previous day's low, for example. That might be where you're more interested in a reversal, as you were here from the previous day high. That's why we were interested in trading the continuation trades and the reversal from that location. I hope that makes sense. I hope this has been helpful to you, this little series. Please give me a shout out. Let me know if these were helpful to you to understand how to build confluences around your trading, build your story, understand things like market structure, using EMAs, trend lines, chart patterns, that type of thing, to help you to see how price is moving, to add additional confluences to your trading so that you're taking much higher quality trades. You can trade less frequently and know that you can get consistent profits when you're taking much more confluence trades. I hope this has been helpful to you. I'm Roxie from the Trading Floor. Thanks for joining me.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below, and come back tomorrow for another video and another chance to enter.